Alrighty, homies, welcome into the prep session on the week.
First one of the year, technically.
Oh yeah, you're right. Damn, this is the first prep session of the year. Sheesh. Welcome back. Uh, as usual, macro covering into technicals, into uh the granular view of the market. So those of you that have been around for a while, you know the structure of this already. So let's get started. I don't want to waste anyone's time. I know you guys are attending in the night, some of you and some of you in the morning. But just having a look at data that came out over the weekend, there was some reports that came out, which I want to put in front of your eyes. At the same time, I want you to understand that when you read these reports, it's so important for you not to become biased. Okay. So for example, we had a fair bit of flow that came in on Friday. In terms of insider trading, there was not really much insider information that was insightful. Remember, for insider information, whenever you see these charts, the green ones are the bought insiders, and then the red ones are the sold insiders. And my theory with insider trading is really simple. If you see a name that you recognize here, then there's a reason why the insider is buying shares. There are many reasons why an insider can sell shares, but there are very few reasons as to why they buy. So why they buy is simply because they want their investment to go up. But why they sell could be many, many reasons. Like the guy wants to go buy a yacht. You remember when you guys saw Zuck selling a shit ton of his shares when Meta was like sub 400 last year. And then also we had a prime book report that came out. So for those of you that don't have access to this on our Discord, I just highlight this to you guys. And the prime book report, remember, this is the broker for your hedge funds, right? And ignore the top one here. It's just mostly talking about emerging markets, which, by the way, China is included in this. You can see that Chinese equities, however, were slightly net bought by hedge funds going into Trump's inauguration next week. And we saw this partially happen with BABA 9988 on the Hong Kong exchange yesterday. And we'll see how the market opens today. But remember, it doesn't mean that you see that they have slightly bought means you go buy. We're still waiting for confirmations on this. And then the next thing is managers net bought healthcare stocks for the fastest pace in 5 months, driven by long buys. And so remember, this is only for the past 5 trading sessions. And for these prime book reports, I try to only understand that the actionable insights for these reports only start brewing a couple of weeks after hedge funds have been actually stopped out of their positions. So whenever I see hedge funds start buying a specific sector, I'm almost inclined to take the opposite of what they're taking most of the time if it's too stretched in valuation. But you can see that there was obviously most of the subsectors within healthcare that were bought. And then on top of that, there was another report here. Let me find it real quick. Here we go. Which kind of highlights the skew and how much on each side they were buying. So you can see macro products, ETFs, and indexes were net sold for the third week straight due to slow pace versus the prior 2 weeks. And short sales were outpacing long buys 2-1. So more selling than buying in your large cap ETFs. And then if you look at single stocks, saw the largest net buying in 10 weeks. And here, 7 of the 11 sectors were net bought on the week, led by healthcare, infotech, financials, and industrial. So, okay, let's have a look at this very quickly because then, this gives you more insight on what you're trying to see. So healthcare, infotech, financials, and industrials. Healthcare. Okay. Infotech is just tech, right? Financials and industrials. So out of all of these, the one with the best upside is obviously healthcare. But we haven't broken structure on this to reverse into an uptrend yet. So actually, upon looking at this further, it does look like there is a possibility that you get a pullback first before this sector actually takes off. Now, what about, so what do you do with this information though, right? So XLV, what are the top holdings within them? That's the next thing you need to look at, right? Because if this sector is about to move, then what is the main things that make up this sector, right? This is what we went through in the course as well, thematic rotations. And you can see that the top, allocations here Eli Lilly is 11%. United Health is 9%. Johnson and Johnson 7%. And then obviously when you go below 5% onwards, it's not really that significant. So I'd say only these four are the ones that are more likely to move. Now, Eli Lilly, this is an interesting one because it's sitting at almost like a 1 year low. So almost a 52-week low here. And then if you look at UNH, right, it's also looking like it came down very aggressively, got bought up, and then now it's also rejecting and coming back down again. It didn't quite go back into this liquidity zone or this demand zone that was way down in 430. And so particularly for this setup, I wouldn't want to trade long just yet, right? But then if you look at Johnson and Johnson, different thing altogether, right? This is a much nicer setup. And we are already long on this one. But liquidity got swept with this. And then it had rallied quite a fair bit. It's hanging out above 147, which is your previous highs. So I like this setup the best for potential upside. Okay. If, of course, if it can hold 147. If, let's say we open up and then it decides to sell off again, then it's likely to come back again to 140 or this 141 level to draw more liquidity here before moving up again. So you have to be really careful with playing this long just yet unless Johnson & Johnson decides to gap up, right? And then if it does gap up, you'll be looking for that 150 rejection into a potential 147 bounce like that. Okay, so that will be the plan with Johnson & Johnson, really simple. So the main thing that I'm trying to make you understand here is don't just take this report at face value. Just because everyone says that these are the sectors that are bullish or hedge funds are going long on it, it doesn't mean you go long. Okay, you wait. You have to wait for confirmation. You don't just go off the report and just make your own decisions because this can be very skewed. And remember that this report is lagging. It's not real time, right? You don't have this in front of you in real time. So this is information that's old, right? So just understand that they have been buying healthcare and that's all. Okay, there's not much to it other than that. And then you have financial conditions now, which remember the entire FCX, this just a couple of weeks back, it has been tightening, right? And now you probably see this start to come down, loosen back up as the 10-year yield and dollar index are moving down now. So you can see on the macro side, the 10-year yield came up. It didn't get past the levels that we were actually looking for it to get to. I did mention, like, if we were to get up into the 4.879, then that would cause a little bit of further correction, but we didn't get that. And when I say further correction, I mean on the indices. And then 5% was like the absolute top that we were looking for, but we never got there. So now if we break below this box here at 4.487%, then you'll see that the stock market will have a lot of relief and potential upside. Okay. And I've explained this during class. Now, on the same other hand, look at the dollar. Because people are buying bonds, right? This weakens the dollar because now the market's going the other way. So now instead of pricing in higher rates for longer, the market's now going to start pricing in potential rate cuts. So exactly what I mentioned 2 weeks ago on the YouTube video that I posted about how the market was started the year with BS assumptions last year and this year, the same thing's happening. The same swing of the pendulum is happening. We go from expecting no rate cuts to now some rate cuts, and then eventually the economy does really well and the market, boom, right? So understand these moments of fear, panic, where everybody starts screaming, the market's going to die, tomorrow we're going to crash, and whatnot, is always just overdone, right? So now on top of that, you have the VIX back into our safe zone, right? Anything in the yellow is kind of safe zone. I tend to prefer VIX below $17. That's like my line in the sand. But $14 is like back to safety, basically volume compression instead of volume expansion. And we are probably entering back into a positive gamma environment, which means that now price action will more than likely spiral up instead of spiraling down. We just went through this in class yesterday, right? And so you have a little bit of the macro supporting the indices now. Now, if you look at the technicals, just SPX and NASDAQ is what I focus on specifically, and Andrew's about to get into the very specifics of this right after this. You'll see that SPX has been kind of consolidating and unable to break out just yet out of this very important 6,000 level. This 6022 or 6,000 all the way to around 6,050 has been a very strong potential rejection zone. And even though the volume shelf is sitting right above it, it's just been having a lot of heavy rejection in this area. That is to say that it's a very simple way to play this. As long as you are not able to break above this, then you could engage with some bearish puts. But the only problem with that situation is expected to be short-lived, because I would ideally want a bounce at around 59.50 on SPX, which will now become a support zone. Or if we do break below that, then you're likely to get a support at around here or back all the way down at 58.78. So as we see the gamma levels that Andrew's going to present to us and the dark pool levels, we're going to get more color on this. But if we break above this 6,000 level and then start forming support over here, then that's going to set us up nicely for back into that all-time high territory at 61.20. Okay, and that would be the end of your corrective wave and end of the corrective cycle. The NASDAQ is a very similar setup, right? You need to break this 21,640. And if you bounce on 21,640, that means break, bounce, then that's going to lead you up into 22,000-ish. And that will be your interim resistance short term. And if you reject here, like how we just did, and we are not able to claim this back over at 21,638, then what's going to happen is we'll likely come back down into 21,200 to find some support. And if you break down that, then you're going to go back down into 20,800. So NASDAQ's a bit more clear, a bit more straightforward. SPX is a bit more choppy, but that's because, remember, you have a lot of speculation coming up this week. Big earnings week. Next week, even bigger earnings week. And next week, you have FOMC. Remember that. So this is not the time for you to be taking unnecessary risk. This is a time for you to actually start looking for setups that are forming really, really nice opportunities and keep them on your radar so that when the time comes and it's post FOMC and it's post earnings, those setups will come alive and you can trade them. That's the angle you should be taking this next 1 to 2 weeks to do. It's really firm up all of the high value and success setups so that you can be prepared for when the market actually moves and is not in this weird consolidation slash, what is the word I'm looking for? A confused state. Okay. Because there's still a lot of anticipation here. Yeah, and so that's all I have in terms of macro and technicals on SPX and the sector rotations. As far as sectors, I think we all know, we've been talking about this for weeks, but energy is one of the best performing sectors that we saw, which I already spoke about multiple weeks ago. This will be the de facto hedge for everybody, right? I still think financials have a little bit more upside. And then if you look at technology, it's looking like it might reject here. And so that might cause a little bit of consolidation for a little while. Who knows, right? Technology might just rip and go try to break that all-time highs if NASDAQ is really strong. So don't bet all your beans on healthcare just yet. We'll give you more updates if we see more flow. The other sector that's been bouncing is consumer staples, which hasn't broken out yet as well. Remember, 77.50 here will be your line in the sand where this will become your pivot point. And then you have your downside pivot here as well. Remember, break upside, bounce leads to higher. Break downside, reject, leads to lower. So either way, we'll have to watch how this sector does in the coming weeks. Consumer discretionary still hanging out here. Materials is the other sector that we were looking to go bullish on last week, but FCX, the setup wasn't perfect and prime for a swing trade maybe, but I don't like the upside downside risk reward ratio so far. If anything, I want this to pull back more. And then industrials halfway through the move, so ignore this one. Communication still looking kind of weak. Real estate now should recover slowly if bonds are coming back. And then utilities are already halfway through the move, so we'll also be watching this sector. So so far this week, the sectors aren't looking like prime yet, but in the next 1 to 2 weeks after earnings, all the dust will settle. We'll have more info. And I hand it off to you, Andrew.
All right. Let me share my screen with you guys real quick. Okay. So let's get into the nitty-gritty stuff. So if we're looking at the week, right, and we're talking about SPY, bulls are expecting 606.40. That's based off the implied volatility of the contracts. Bears are expecting 588.76. So for you guys that have been here before, right, you know that that is the range of the week. Okay. So you can see here, here's the implied volatility if you want to look at each day. So, tomorrow you're looking at a $4.60 move, either upside or downside. So just, keep that in mind when you're looking at, should I take profits? Like if it's a day and, you're up $4.70, you should probably take profits because that's the expected move of the day, right? So keep that in mind. For me, I play the week, so I don't really care about the day to day. So these are the targets that we're looking at. If we look at the algorithm for last week, they were very bearish. We saw some downside positioning, as you can see. These are the options flow. So this is showing you them building positions to the downside. So it's just be cautious, right? And I'm going to give you guys the key levels, but don't be surprised if the market throws a fit at some point. What will be the catalyst for that? I don't know. I don't listen to the news. I don't care what the news says. All I look at is, do I like the risk here? Do I want to apply risk here? So as you can see, though, there is downside positions being built. So, and you can see the levels here, 580, here's 5980 on SPX. On SPY, this is down around 596. So you can see the areas that they're building the positions. These ones are on the month, so over the next 30 days. And you can see 575 and you can see 5800. So again, be cautious. Don't think like, oh, there's no way this can happen. Just be aware that if these levels break, right, these are areas where we could see price move to, and we want to be aware of that. Okay. If we look at the NAMO, we can see that the NAMO here on the short term is looking for a drawdown. So a move to the downside, again, wouldn't surprise me much. But if we were to get a really bullish day, like let's say tomorrow is extremely bullish and we go to 606, the NAMO might get overbought, and that to me is like red flags flashing. So be cautious, right? If we do get a massively bullish day tomorrow, then we could find ourselves in the overbought territory to start the year. And that would be pretty awesome because we could start to look for nice opportunities for risk to reward. But if we do reject here and we get that drawdown like T was talking about, that wouldn't surprise me because that's essentially what the oscillator is telling us. If we look at the long-term trend, the Nazi did flip bullish. So again, we've been in this kind of bearish move for quite some time. So, you can see the last few times that it happened down here, the market went on a pretty good run. So just be cautious, be aware. Sector rotations, I agree with T. If you guys remember, I've been talking about energy this year as a sector to keep an eye on. We got alerted on it I think last month. And if you take a look at XLE, right, it hit the golden pocket. So pretty spot on there. Move those real quick. Right, you can see XLE right out of our buying zone here with the bullish order block. Boom, out of that, right into the golden pocket. You guys know what happens if it breaks the golden pocket. It makes a move up into the high, which would be about 98-ish. If you look at XL or XOM, which is, you can see it's lagging a little bit. You guys know what I say about the laggers, right? Watch the laggers. So this is sitting around, I think, 115 right now in the night session. So I would look for this to possibly make that move up into about 117, 118, which is where we were kind of looking for it. And that would mean that XLE energy would make a move over that golden pocket. So if we're looking at sectors, right, this one has moved pretty nicely. So we can see here that if energy's already moved, what's the next sectors that you look at? And right in line with what T just talked about, right? Staples and healthcare would be kind of those next two that you want to pay attention to. Okay. So, and that would lead to, right, possibly a little bit more downside in the market, right? People trying to position themselves to protect their portfolios. So, just another thing to keep an eye on, right? Okay, we're going to skip all this stuff because this is all just, stuff that I use as I analyze things. Now let's get into kind of the dealer positioning, right? So as T mentioned, we are in a positive gamma environment. Now, dealer deltas have gone positive, which means their actions are actually sell the rally, right? So when dealers are in positive gamma and price increases, was what we just saw, their deltas increase and they must sell more shares to hedge, right? So the one thing you want to be paying attention to is potentially them selling into these rallies. So using the rallies as liquidity so that they can unload positions to possibly look for a move to the downside. So just keep that in mind, right? The environment that we're in could possibly be that rejection and look for those opportunities, which I'm going to show you where they are. So if we look at gamma here real quick, we can see that if we look at SPY, the biggest level is 600, right? It's clear as day. So pretty easy evaluation. If we're over 600, we're probably looking at more upside. As long as we're staying below 600, you want to watch for those rejections, right? And those opportunities to possibly short. If you look at SPX, right, similar situation, right? Big wall here at 6,000. And so again, as long as we're below 6,000, opportunities to potentially short, use 6,000 as that guide rail. Price gets over 6,000, then you got to watch out for a potential move to go higher into our all-time high area, right? So another key thing to pay attention to is going to be this 600 gamma level, okay? That brings us to the dealer positions, right? So right now, if you look at all expirations, there's buying pressure off of 585, which is what kind of drove us up here last week. And there's selling pressure at 590, 598, and 600. So what does that look like from a chart standpoint? So if we look at SPY, we can see that right here, we are right at this selling pressure, right? So what that means is the market makers basically are long here. They had to sell puts, okay? So the customers came in, they bought puts at 600 and 598. They were deep in the money, but now the dealers have killed those contracts and pushed price all the way back up into this area. So now if price breaks over 600, all of that selling pressure dies. Therefore, there's no incentive for the market makers to push the price back down below 600. So if price gets over 600, you kill the selling pressure, you break the gamma level, and you start to move above the golden pocket, which would mean, right, that you'd make a move here up to the upside, which is your upside target right here at 606. Okay. So if price were to break above this 600 level and the market is bullish because of things that Trump is saying, I would not be surprised if the market melts up into our bullish target, which is 606.40. Now, if the market is not bullish and we are rejecting this 600 level, and all of a sudden we start to see price get weak and go look for liquidity, then you could reject the 600 level. Keep in mind those algorithms are bearish down here, right? So that's where we saw them building their bearish positions. And we would not be surprised if we saw price retrace off of this wave, okay? So if price is over 600, there's really no downside, right? You break over 600, the selling pressure dies, you break the gamma level, the market makers can very easily melt the market up into that 606 target. If price stays below 600, then you're below that gamma level. You have that as resistance. That selling pressure has to kick in because the market makers have to sell shares short in order to hedge their risk that they took at that 600 level. And that can push price down towards those positions that we saw within the algorithm. Okay. So 600 is going to be your key level. You have to pay attention to it. If you are going short and price is sitting above 600, then you need to be extremely careful because you have nothing that triggers that selling pressure that's going to push you down. If you look at this price action, that 585 level that I talked about last week, there's your rejection, there's your break of 585, and there's all your buying pressure, right? That pushes price all the way up to the golden pocket. Okay. So that played out exactly as we expected. You can go back and look at that playbook. You can see the algorithms were bullish last week. You can see how all of it played out. So 600 is going to be that key level that you want to pay attention to. If you're looking for opportunities this week and does price close above 600, then I most likely would look for price to push up to 606. If price stays below 600, then I'm looking for that retrace and for them to go look for some liquidity, hopefully make a higher low, and then we get a bigger wave to the upside in February. And if you look at the seasonality, February is actually where you get that bullish wave,
Yep.
right? If you look at seasonality here, right, January, end of January is normally pretty bearish. And it's actually in February where you get that bullish move. So that would fit in line with seasonality pretty well if we were to get that to play out. So we'll keep an eye out for that this week and see how things set up and if we get the opportunity to capitalize off those moves. So with that, I will open it up to you guys and your questions. I think TLT, maybe it kind of broke below the golden pocket a little bit, just a tad. But it did bounce in this bullish order block right here. Right, you have this order block down here, right there. So nice little bounce there. So you could, right, that wave is technically, right, that was wrong. So we'll get rid of this. We'll get rid of this. We'll get rid of this. So the first wave you'd be looking at would be you would use this as your low. And then you would play this retrace off of this wave right here would be your first kind of evaluation here. So you'd be looking for price to go to about 92-ish. And you've got a wall at about 90. So, which I already got it there, so I don't need that. Yeah, so you got a wall right here about 90. And is there? Oh, yeah, 95 and then 100. So get rid of that. 95. And then 100. Okay, so keep in mind as you guys start to put in your ideas, Netflix has earnings tomorrow, and then mega caps all have earnings basically in the following weeks. And so what do we say about earnings? They're 50-50, so technical analysis does not matter. Exactly. So Apple. Apple's still sitting like right in the golden pocket here, so nothing's really changed for me. If the market is bullish, you'd look for a bounce here. If the market is bearish, right, we just said that there's potential that the market might pull back. And if it does, you're looking at way more downside, right? So I think, is it buying pressure 235 still there? Might be, let's see. It's right on Apple. Look, somebody bought 220 calls for December 18th, 11 million. Let's see. My internet is slow. Okay. So let's see. Dealers are long 245. Dealers are long 240. So that 235 buying pressure is gone. Right? So this is gone. So you can get rid of that. You have selling pressure at 245 and 240. So dealers are long. So that would mean customers have puts at 245 and 240, which are obviously in the profit. So I would not be surprised if dealers tried to kill those. And then buying pressure at 250. So 245, 240, 250. So selling pressure at 240. Selling pressure at 245. So right now, dealers have to hedge their risk because these puts are in the money. So price would have to get over these levels, right, to get going here. So it's all going to depend on the market. And does the market show strength here? Right? That's really going to be your question. Does the market show some strength here? And if so, right, Apple would have a nice move potentially to 250 to 252. Right there. Now, in reality, you have earnings here on the 30th, which is next week. So they might just keep price sitting down around this area and then wait to see what happens on earnings, right? So that's kind of your challenge here. So, but you do have this order block down here that so far has been holding. Okay. So I don't scalp or intraday trade. My plan on SPY is to wait tomorrow, like you said, for where SPY lands over 600. And I have January 6591 and 605 for the same limit order at 105, which is priced down. Yeah, that's not a bad plan at all. Okay, so that's Apple. AMD, short term, AMD could bounce. Also has earnings coming up again. Earnings here on February 4th. If you're looking at this short term, this could be a little wave right here. This is, this is the high, this is the low. I think it's on the 4 hour that I have that fibbed on. Yeah, there it is. So your target would be somewhere around 125 to 127. That would be your first kind of targeted area. And then if it breaks over that, right, you'd go into the high here at about 131. But long term, nothing's really changed here. So long term, I'm still fine. This looks like a 5-wave retrace to me, right? So there's your first wave, second wave, third wave, fourth wave, fifth wave. So we'll see what happens with earnings. Earnings come in here in about 2.5 weeks. And that'll kind of decide things. But if you're looking at this on the short term and you're trying to scalp it, you're looking for continuation up to about 125 to 127, right? Using kind of this area as your stop loss. So you can see 116 was gamma support. So if you go look at dealer positioning here, it's pretty bearish flow looking right now. So you can see here that dealers are long 130, which means customers have been short 130. That expiration is for February 21st. So my belief is that we'll probably see price over 130 by February 21st. So maybe bullish on earnings. We'll have to wait and see. But as it stands right now, dealers are long 130. So we need price to get over 130 to be able to trigger, more aggressive moves here and start to squeeze out those shorts. So, all right, Nike. I'm not going to do short term on Nike because Nike's been beat down pretty bad. So if you're looking at it short term, sorry. Long term though, it's pretty good. The problem is you need like an earnings call to trigger the reversal. As you can see right here, this is long term fib here. Golden pocket sitting down around 60 to 43. So if it doesn't have a good earnings call here, I would expect more downside. But if this can get a good earnings call and start to show investors that they're turning the corner, I think you're going to see a lot of people pile in to start to buy this, but you have yet to see that happen. So I would be careful here. Again, you're kind of like right at this key level, so it's an easy risk to reward if you wanted to enter it here. But as it stands right now, there's not really anything positive happening. So I think you need an earnings report to kind of trigger people to want to get excited to buy this. Like nobody's really excited to buy Nike right now. Same with AMD, right? It needs a good earnings report to kind of trigger people to get excited to buy it, right? People need to see that the company's moving in the right direction, and you just don't kind of see that right now with Nike. So you can probably see the same thing. I would assume it probably has a gamma support level. Yeah, it's right there at 70. So as long as it stays above 70, it's okay. If it loses 70, you're probably looking at more downside. Right? I think I have that on my chart. Yeah, I do. It's right there. Gamma level right there. So yeah, so it's got to hold this 70 level. But again, doesn't look great from a chart standpoint. UPS. UPS is another long term. I wouldn't look at it on a short term basis. If you want to play this, I mean, you got to look at it from a pretty long term standpoint. This is a weekly chart. It's been in a downtrend since about January of 2022. Sitting in the long-term golden pocket here, you can see I already have this trade planned out. T did a fundamental evaluation of the company. It sits around 190. So there's pretty good upside here. Again, I'd be using the golden pocket low It's kind of my key area. As of right now, it's holding pretty nicely though. So on the short term, you really need to see price kind of close above this area, right? You want to see this resistance here kind of become support. So you want to see something like this, right? To kind of show that these sellers are getting taken out. And then, right, then you'd get your move to the upside there. But again, this is not a short-term trade. You got to be very careful here if you're buying short-term options contracts. Don't know what's really going to happen. I think it just had earnings. No, it just have earnings. No, it has earnings coming up on the 30th as well. So again, probably want to see something from earnings kind of trigger investors to kind of want to jump back in. You can see here on the daily, you got, a bullish order block here. That's a good sign, right? So that tells you buyers are starting to come back in, right? Because if you look at kind of all of this, like seller, 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 and then finally you're starting to see a buyer come in, right? So could also be a liquidity sweep, right? Because you had a previous low here and that kind of got taken out. So again, I like it long term. Short term, you're gonna have to be a little careful. Da, 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 da. At least that's the plan as of now. So just change Uber and then NVIDIA. Yeah, so Uber, nothing's really changed for me on Uber. I have this charted. Here it is. So you can see kind of have that established low down here. We're looking for that retrace up to the golden pocket, which is about 78 to 80. Again, you have earnings on the 5th. So not this week, but next week, right? So I think, is that next week? I think it's next week. This week is the 27th. Next week is yeah, so it's next week. So you have earnings next Wednesday. That's probably going to decide whether this goes up to the golden pocket or not, right? And that's what you got to be really careful for with looking at trades, this week and next week. You have so many earnings coming out. You got to be extremely careful on trades that you're taking and you're swinging, because if you're not paying attention to those earnings reports, you might get washed out, or you might wake up and all of a sudden you're at your target and you're like, oh, that was cool, right? So just keep that in mind. Earnings coming up here. As long as the low holds, which is what we talked about, this kind of 60 level, we're looking for that move up into this golden pocket area. So if we look at kind of the levels here, you can see there's that support at 65. So you're like, okay, cool. As long as I stay above 65, and you can see some gamma building up to about 80, right? So yeah, 70, 75, 80. And you go back and that kind of puts you right about this area right here, right? So we can kind of add those levels real quick. We got 70 and we'll just throw that on here real quick. It's resistance, and then we'll throw a 75. 75 right there. That's a resistance, and then we'll throw a 80 in here, and we'll call that the target. Right, and then we're just going to go ahead and delete this 60 because it's no longer there anymore. 65 is still there, so we're going to make that support. There we go. So, and you can see that price bounced right off of that 65 level, right? So you can see price kind of bounced right off of that 65 level and then use that as a push. So now you got to break 70 and then up to 75. Okay. Okay. NVIDIA, easy, 140. You can see here that it rejected that 140 level. We move this into the 4-hour here. You can see it clearly, right? So bounced really nicely off of this 130 gamma support. So it came right off of that level and then pushed into this 140, right? Where you have this order block right here. You also have buying pressure, which means dealers are short. So if price gets over 140, then I like it for a continued move, right, to the upside. But it needs to get over this 140 level. And then your target would be somewhere around this order block area right here. So this would be your low. This would be your high. And your target would be like 145 to 147. That would be your first golden pocket area. So as long as it gets over this 140 level, I would expect a push up into this area. Um, but 140 is key, right? If you take a look at this 140 buying pressure, it's pretty large. So if you look at this, right? Okay. So if you look at this level here, you can see that dealers are short, right? Which means customers are long. So customers bought 140 calls, therefore dealers had to sell those 140 calls. So if price breaks 140, they have to hedge those positions, right? Looking for that move to the upside. So over 140, you could see that buying pressure kick in, and then you would get upside. Below 140, probably a retrace would be my guess. If you can't get through that 140 level. Okay. COP, I think that's energy, right? COP. Yeah, ConocoPhillips. Yeah, so far, pretty much what is expected. Golden Pocket is sitting up around 108 to 110, and that's your high, that's your low, so nothing's changed. So that play is still technically in play. Right, there you go. So right there. Now, if you want further upside into this wave, right, this would be the high and that's the low, right? And that's, the target, then you got to clear this order block right here. Right? So you got to clear that area to get there. I think this is a 4 hour right there, if I remember correctly, or is it a daily? It's a daily. So you have a daily bearish order block right here that you got to clear, right, to make that push up into this area. And then if you go into the weekly, you have a bearish order block right here. This one right here that you got to get through. Okay. But so far, I would expect this area with energy being as strong as it has been. And then if you can clear that, then you look for the break of this area for the push up into this kind of like 121, 125 area. I still think CVX on the long term looks the best. So CVX on the long term looks the best. This is a monthly bull flag. So this is the best energy setup in my opinion. I mean I like XOM, but I like the setup on CVX better than any of them. Right? This is XOM. It's kind of consolidating above the all-time high and this dark pool level that came in a long ass time ago. So again, I like XOM. I like CVX. Not sure what COP looks like long term. Not too bad. Kind of consolidating here. Got a potential DTEF. And then Oxy long term. Yeah, this one still has kind of a long ways to go in comparison to the others. So CVX looks the best in my opinion from a technical analysis standpoint. If energy decides to be the move here, I'm in and out on Rio and FCX never hold. Is that a question? A statement? Never hold. Okay. Melly. Melly. Looks like it bounced in the golden pocket on the short term. You have another earnings report coming up here in end of February. But I mean, not too bad. Looks like it bounced kind of right out of that golden pocket area. Target would be about 2000 to 2050. So I would say nothing really changed here from the last time we looked at it. I think that's a weekly order block. Yeah, you got a massive weekly order block here that you're gonna have to break. But if you can break this weekly order block and then go into price discovery, that's a great sign. Right? So if you can break through this weekly order block and get into price discovery, targets would be like 23, 27, and 2,500. So this wave would most likely play out. Right? You can see it tapped this buying pressure. There's buying block right here, this order block. So if you get through this area, probably going to happen on earnings would be my guess. Then I would look for 23 and then up into 25. Those would be the way I'd look for that. So as long as you still hold this golden pocket down here, this kind of 1700 area, you're still looking for this move up into this mid part of this bearish order block. So I'm not sure if there's any levels here. Let's take a look. It's been a minute. Yeah, you still got, looks like support at 1700. So you still got that support at 1700 and your biggest level is 2000. So looks like everything is still pretty in line with where it was at. So let's just add the 2000 level because I don't think we have it on here. There you go. And yeah, so I would say nothing's really changed here. You can see even on the weekly, this candle never broke below the golden pocket. So it got bought up. So still looks pretty good. Did the expected price for AMD change from 143 to 108? Different levels for February. We're not at February yet, so those contracts haven't expired. So pretty sure I put the dates, didn't I? Yeah, January 30th. So we have not, this hasn't expired yet. So at the end of, is it this week? Next week? This week? Next week? The end of next week, I will do the next evaluation with February ending contracts. So nothing changed there. Gold. So didn't quite come down as far as I was hoping. So kind of looks kind of bull flaggy here. So bounce kind of right off of this 240 level, which was a retrace target on a smaller time frame. Gold. A lot of upside targets, nothing clear. So if there's not a clear level, then I don't really care, to be honest. But 250, 260, so wouldn't kind of use that. If I'm looking at this, this does look like a golden pocket rejection. So this would be the low. This is the high. That is the golden pocket. Might be on the daily that I had it lined up on. Was it down here? Maybe something like that. So you need a break above this golden pocket area because as it stands right now, this has just been kind of playing around. So 250 is selling pressure. I'm going to double check that right now. But you would need a close over this golden pocket for a push up towards the high, which would be close to that 260 area. And then obviously you need a break of the high to start price discovery again. So let me double check real quick. That's still there. But as it stands right now, you need to break that golden pocket area. Okay, looks like algorithm is bullish. Let's see. Okay, that expired. So buying pressure 246, buying pressure 251. Let's double check that expiration to make sure it didn't expire. Tuesday, Wednesday, Thursday. Where's 27th, right? I think 27th is the Friday. Oh, 24th. 24th and 31st. I was a little off. 24th. So this week, buying pressure, a little bit at 250, not much. Let's see, 31st. Not much. 27. Not much. 27, 214. Nah. 221. 221 has buying pressure at 265. That means customers are long, dealers are short. So I'd have to do more digging to find out. 251. I wonder, did that expire? That had to expire because all of that expired on the 17th. So I wonder if this all expired. I'll have to look at it at a later date. But as it stands right now, you got to get over the golden pocket. So maybe buying pressure here, maybe not. I don't know if it expired yet. Looks like it did. But you need to get over the golden pocket here for a push to 255 and then up to about 258. And then over that, you could see more upside. So, oh, this is the little wave. Here it is. I think it was this. So it's my little wave. Yeah, it was. So, and then, yeah, that would give you your extension targets are the same area, 254 and 259. So, yeah, so this little wave is holding, and then you got to get through the bigger wave. So, long-term portfolio construction question, sitting on 8% cash right now, but not making any moves right now, but I want to add metals. Thoughts on platinum, PPLT, AA, Alcoa, GLD, already have a position. AA, I have a chart on. A little bit late, but again, not bad. This is when I was kind of talking about it down here in the golden pocket area. Target is around 73 to 80. You probably have to talk to T to find out if that's a fundamental that lines up with a fundamental evaluation. But so far, the wave structure has been pretty spot on. So it needs to break this order block here, and then there's a bigger order block here that it has to break. But if that happens, then I'm looking for a move up into 72 to 80 is the target. So, and then FCX looks good as well. T just talked about it. FCX. You can see here also sitting in a golden pocket. So, not a bad place to apply risk. Easy evaluation. You have an order block right here that is also playing as support.
Just a heads up, AA, I can't do a valuation on it because the business is a non-cash flow producing asset. It's
Uh,
negative cash flow.
Lame.
Yeah, net income is negative, free cash flow is negative.
Yeah.
Um,
No help there then.
yeah, unfortunately, I wouldn't want to take shares in that kind of a business.
Yeah. So you can see FCX here, not a bad place to take risk. It's been consolidating in this area now for what, 3, 4 years. So once it breaks this high, most likely you're going to get a massive move. So, oh, well, highs over here. You got a massive order block right here that you have to break. I take that back. You got to break that order block. So, but not a bad place to take risk here. It's a possible bounce here, as T's pointed out as well. So PPLT, I don't know anything about that. PLT. So I'll just give you from a technical analysis standpoint, looks like it's just been consolidating for the last few years. Yeah, again, sellers have a clear lock on this high up here. So from a technical standpoint, you got to get through that area to get upside. But then also your buyers have, they've held this area pretty well. So you've got two pretty clear zones here to evaluate and apply risk on. So not too bad, but I mean, for the last few years, it's just basically traded sideways. Even if the cash falls, okay. Is my next energy position OKE? Okay, Snow, okay, E. What about XLE over CVX? XLE is the ETF. So CVX is the second holding in there. Okay. OKE. I don't know what OKE is as well, but I'll take a look. I mean, again, if you like it, to me, this isn't where I would buy. It is in price discovery, so that's good. But from a technical analysis standpoint, I would wait for a retrace. I mean, I don't know if you get one, but not my area of expertise. Snow. I think I still have snow coming down. Doesn't look like it necessarily is getting there. I would say this retrace I have possibly hitting 176 to 180. Um, again, you don't really have any confirmation. It's not a great place to enter. You have earnings coming up on the 26th as well of February, so just keep that in mind, depending on how long your position is. Um, but it's just not a fantastic place to enter a position. Because you essentially could do this, right? If you go short, it could come all the way up here and then reject and come down. If you go long, you might get a little bit of a move and then it might, flush on you. It could also just break down, right? It doesn't necessarily have to get all the way up here. It could just, come down. Um, if it breaks this area, like this area right here, then I would expect it to continue up to that golden pocket up there. Um, just kind of depends what you're looking for. But for me, like when I was talking about snow, it was down here. So, I mean, for those that remember when we started talking about snow, so to me, this is just kind of late to the party. Most of the move has already happened, right? Down here was a great risk. Up here, you're kind of just put this in a box and you kind of just evaluate it from there, right? So I'd be careful. I mean, if you move this into smaller time frames, you do have a nice little order block right here on the 4 hour, but this kind of already played out. You can see, right? So like if you were a buyer here, this already played out, right? Price came down, it tapped that order block. The buyer stepped in and they pushed price up. So if it breaks this order block, I would expect it to push up into this golden pocket, and then you'd have to evaluate from there. So not the best place to apply risk, but again, it just depends on what you're looking for. What about XLE over CVX? Again, XLE's already made the move. So obviously, if CVX moves, XLE should break the golden pocket, and then I would look for it to push up to 97. If you're talking about the long-term setup, the monthly, again, it's not a bad setup. It just, it needs to break this order block right here, right, to go into price discovery. And for that to happen, CVX has to break, right, has to break this bull flag. So you can do XLE, it doesn't matter. It's not going to change much. The thing about XLE is just on the short term, like that move is already played out. So as long as you're looking at it in the long term, short term, this is done. This is when I tell you guys are late, right? This is where you want to buy, right? This area. If you're becoming a buyer here, then you're late, which means you got to watch for the retrace, right? Before the next move. So doesn't mean you don't have to, you can still buy, but you are late to the party. Could you show me VXX, not VIX? Order blocks again. I guess I didn't mark them down. I don't even use that. Are you talking to T?
I have no idea.
I don't even look at VIX. I know I probably should, but I don't. VX.
SPX, that's isn't that volatility off?
Oh, is this a
It,
stock?
is it stock or ETN?
What
Oh,
is Someone asked me about this. Yeah, so it bounced out of the golden pocket. Not bad. Or this order block, I'm guessing. Yeah, so it held. Um, your target then is up here, 63. Whoever named this ticker, they should be fired.
what?
Whatever CEO is like, all right, we're going public and we're going to call it VVX. Someone in the room should have been like, hey, just a heads up, you're going to piss off this guy one day. You probably shouldn't do that. So here you go. Yeah, not bad. So we can just get rid of that golden pocket there, that fib. So yeah, and you got a second order block that came in. So now you've got even more support building down here. So that's even better. I think that's what you're looking for. Daily longer order block, I mean shares. Yeah. These are 4 hours. Was it the daily? Maybe it was the daily. Oh yeah. And there's two order blocks on the daily as well. So yeah, this wasn't a bad buy at all. Not bad. I don't know anything about the company. So, but yeah, I mean, right out of the golden pocket. Again, if you guys want to capitalize on this strategy, you have to buy into the fear. So if you don't, you're going to be late. You're going to miss the moves. Yeah, I know. Every time. It's eventually I'll figure it out. It's not the VIX. Every time. Please tell me Pfizer will see 30 this year. Is there going to be a pandemic? That's the better question. There's going to be a pandemic, then yes. Um,
Pfizer might need more time. Like I looked at it as a setup. It is. It
I
looks.
like it on the monthly.
Yeah,
Here's the problem with Pfizer. I like Pfizer long term.
yeah. The you
I think
short
it's a
term.
risk evaluation. I think it pays a dividend.
Yeah,
As a trade, absolutely not.
yeah. It could still, be sold off for a little while, take its time, consolidate. So
Now, if there is another pandemic of some sorts, or maybe not a pandemic, but some other vaccine bullshit, then I would expect, because again, right, remember, Pfizer for a long time, right, just kind of sat in between this level, and then obviously, right, the pandemic happened and it got this nice shot in its arm and pushed into price discovery. So the question, right, is, what's going to drive their business, right? What new product are they going to build that's going to increase revenue? So you probably want to do your research. From a technical analysis standpoint, again, this is from 2008 low to the high of 2021. So I mean, it's a pretty clear wave there. And it's sitting right in the golden pocket. So again, I don't mind it from a long-term perspective. From a short-term perspective, I would be extremely careful because one, it moves horribly. And it just I just don't see the catalyst that drives it. Now, with that said, as long as this low holds, your golden pocket is 28 to 29. So that would be the first area that I would think price would possibly push to. And then 30, I think, is still the gamma level. I think it's still the gamma level. Let me see. Yeah, so 30 is still the gamma level, and you have support at 25. So support at 25 and a wall at 30. I think I still have it. Yeah, so you can see it bounced right off the support right there. And then 27 is not there anymore. So I'm just going to get rid of that one. And then 30 is up here. So just depends. They have the migraine med and Seagate acquisition that hasn't seemed to affect revenues. Not sure why. Yeah. So I would just be careful. But again, long term, I mean, it pays a dividend. At least you get some money while you hold it and you wait for it to make moves. It's another one where you're going to have to see an earnings right? Anytime you guys see stocks like this, right? You see stocks that they've been beaten down and everything. What you need to see happen is you need to see an earnings call come in that excites investors into the future, right? Because that's what's going to get people to want to buy it, right? Either they announce some new product in the line, or they announce some new line of revenue, or they blow expectations out of the water and they guide higher, right? That's what's going to create some type of buzz to make investors go, "Oh, I want to buy this stock at this price." Right? So you need some type of earnings call to kind of say to investors like, "Hey, that's why Nike hasn't really moved, right? That's why AMD hasn't moved."
Yeah,
Everyone's see if something comes in and sparks their excitement.
the other way, if like recession fears come back in, then healthcare as a sector gets, rotated back into, that would be like
Yeah.
another catalyst. But other than that, I don't see the opportunity right now.
Yeah. That would be another one. So another one like that is CVS,
Yeah.
right? So CVS, similar situation, right? You can see kind of looks like a liquidity sweep to me, but if you go into the long term here, right, into the monthly, again, right? And you can see it's already planned out. So into the golden pocket, but again, it needs like earnings calls to kind of tell people, hey, there's value here now, right? The company's doing something to change, their trajectory. So, but you can see it bounced right off the golden pocket. So, uh, still surviving. Um, so keep that in mind when you're looking at those companies that are beat down and you're wondering like, hey, could this make a move? You need that earnings call. Uh, yeah, I thought you might like it. You need that earnings call to kind of kick things off, right? And get things going. So, all right. Did I get through all the questions? I think I got through all of them. Okay. Last thing I'm going to say before we wrap this up is pay attention to that 600 level, guys. That's going to be the key this week. If we can take out that 600 level, then we potentially get this move up to our upside target, which is at 60640-ish area. If we can't take out that 600 level, then you got to be extremely careful. And we might get some type of drawdown to go grab liquidity um, and kind of spook people out. So we'll see what happens this week. Other than that, I don't have anything else for you. So for those that are in the group, I'll see you guys tomorrow morning. For everyone else, I wish you the best. And we'll see how this week goes. So far, I think we're 2 for 2 on the weeks. We've hit the upside targets. I think the first week we hit the upside and the downside target. Last week we just hit the upside target. So you don't always hit both targets, but normally you hit one of them. So we'll see how everything plays out this week. So
Yeah, powers.
take
Should
it
be a good one.
easy.
Peace. We'll see you in the morning.